Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News program. We have one of our good friends of the show and Rob McEwen joining us today from McEwen Mining. Rob, thank you very much for joining us.
Happy to be on, Alan. Thank you.
Well, since we last spoke, it's been a few months. You had a series of really good news out, Rob, and I wanted to pick your brain about that, and also maybe get your views on some of the mining sector stuff, gold and copper in particular.
Go ahead.
All right, let's start with the series of news that you guys have had out. You had drill results or an update on drilling at the Los Azules project. You were able to do a financing at really beneficial terms to McEwen Mining that are significantly higher than the current price. And then you also had an update on the work you're doing in Ontario on your projects there to bring a new project into production. Where do you want to start, Rob?
I guess we can start with Los Azules.
Okay.
It's our biggest asset at the moment. We had 22 drill rigs on the property drilling this year, so a big program. And a lot of it was confirmation drilling, trying to lift the resource from an inferred and indicated to an indicated and measured, so that we could define the payback pit quite extensively, and also just lifting the confidence level in that resource, that 37.6 billion pounds of copper. We found that we stepped out of the model pit area that defines that resource, and we went to the north and the south and extended it 400 meters one way and 700 meters the other way. And we did, and it's really early, we went over the mountain and 3 kilometers away and found indications of another porphyry. There was copper oxide on surface, there was quartz veining similar to what we see at Los Azules, and there was a molybdenum signature that stretched more than 5 kilometers. So, and that's important because the copper is soluble and gets leached, and moly stays behind and is an indicator of copper. So that'll be a big area where we drill next season. So we're in the southern hemisphere in Los Azules. So the onset of winters happened. There's no drilling taking place at site. All the work right now is moving us along to a feasibility study that we'll have out in the first half of next year. Drilling will restart in October when we can get back up on the mountain.
So Argentina is becoming a pretty hot place. The Lundins they're to the north of you, I believe, have done some great work and getting some pretty high valuations for their stocks. But you guys are quite advanced compared, and asset to asset have pretty favorable comparables there as well.
We do.
You know, Argentina has me pretty excited these days with the new government and what's going on there. So how does that all play into your thinking, the interest in what the Lundins are doing, the comparables to you, and where Argentina is going?
I'm very optimistic about Argentina. About a month and a half ago, I had an hour-long meeting with the president, and he was describing how he wants to attract foreign capital and what he believes he needs to enact to get it done. Recently, he put a number of initiatives before the government. The lower house took a few out, but they approved it. It went to the Senate last week, and the Senate approved it. So it has to go back down to the lower house to reflect the changes. But large-scale foreign investment has been approved. They're talking about lowering the tax rate from 35 to 25%, removing the foreign exchange controls that are there, improving the importation, putting some restrictions on labor actions. So we looked at it, and it increases our NPV if it's all approved by about a third.
Wow,
And we're at 2.7 billion right now. So that's
pretty
so
big.
it'd be very positive. I've seen when I was in the Middle East in the past 3 weeks, people over there are looking, they're going, what are you looking for? Like, copper, copper, copper. And they're going, well, we've been over to Argentina in the last month or so, some of the biggest funds over there, looking at the country, saying it's very prospective. It's along the same belt, the Andes, that Chile and Peru are on, and those two countries provide 40% of the world's annual production of copper. So this is the most important place in the world for copper. Argentina, as you mentioned, Lundin has 3 properties.
That whole western side of Argentina it's like Chile 2.0.
Yes. And so the Lundin properties are in the province of San Juan, where we're located as well. They're a little further north than we are. When you look at them, they have feasibility studies. So they're a little more advanced than we are at the moment in terms of their studies. Their capital is significantly higher than ours. They're at higher altitudes. We're at 10,000 feet. The top end of Philo is at Base Camp Everest,
Oh,
17,000 feet. So, and
holy,
that has an impact on the efficiency, not only of the machinery, but anyone working at that level.
of course.
And so we're closer to infrastructure, roads, and power.
I
Uh,
personally know about that, Rob, because when I was in my teens, I did some forest fire fighting in British Columbia, up above the where the trees grow. And I was a hockey player then. I was in very good shape, and my God, that was hard work up there, Rob. Just walking around, and you're talking about even higher.
much higher,
Yeah.
much higher.
Wow. Wow.
So, so we're, I think Jose Maria, one of their properties is in Goldman Sachs estimated in the highest cost quartile. We're in the lowest cost quartile. Based on the metallurgical work that we've done recently, our cost of production would be $1.02 a pound. Sorry, I didn't turn this off.
No, no worries.
Um, so we'd be $1.02 a pound cash and $1.58 all-in sustaining, and a 27-year life, 400 million pounds of copper a year for the first 5 years.
You're like me, Rob. I tend to convert things into what this would look like as a gold project. I kind of do that with every deposit I look at, silver, gold, copper, whatever it may be. And the metrics, if this is looked at as a gold mine, are just off the charts.
I do exactly the same thing because I've been in gold most of my life. And this is equivalent to a 70 million ounce gold deposit, producing gold at under $600 an ounce cash cost and under around low 800s, all in sustaining, with a 3-year payback.
Oh my
Um,
God.
and you look at it, it's a powerful, powerful project. And if you think of the 70 million ounce gold equivalent, that's the same as the 100 years of gold production coming out of the Timmins camp. And that's the most prolific area of gold in Canada.
And there's very few gold miners that have those kind of reserves, resources. That's a big chunk of equivalent gold in the mind of a gold guy.
Yes, yes. So it's an exciting project. We'll have feasibility out in the first half. And at this rate, we hope to have a permit, environmental permit, by the time we get our feasibility out, construction starting in 26 and production in late 29.
So not only are you doing the work to make this a good place to work um, physically because of the elevation, but you're also doing some fantastic things to design a mine of the future that will be an attractive place for workers to want to work. That's people are an important part of the whole mining scheme.
They're critical.
Yeah, sort of, yeah.
And certainly in North America and Europe, we're facing a shrinking labor pool. There, because of the negative impression of mining that most people have, it's affected the number of students going through school. So there's been a precipitous drop in the number of people going through schools of geology and mine engineering. So you don't have the youth, the talent, and the technology coming in there. And there's a lot of people retiring. They have gray
I
hair like me, or they have no hair.
I saw this firsthand when I got into the business. It was in 1993. I was 27 or 28 years old. And at that time, they were talking about the lost generation of all the, because of the 80s and 90s, how people hadn't been coming into the into the business. And it has never really been fixed. In fact, it's getting worse.
Oh, yes,
You
yes.
know, like you say, all my friends, half of them have retired. I'm too dumb to retire. I love this so much that I think I'll be doing it until they put me in a box, Rob. But it's quite an issue that people don't really understand in the maybe even in the business. Um,
No, well, it's quite serious, and you think, well, how are you going to attract the best talent in a shrinking pool of talent? And what will that do to future production? We're looking at demand curves for the metals increasing, and yet the supply, we haven't seen enough investment
it's
in
more like
bringing.
a ramp than a curve.
Yes, but it's a downward ramp. I
Yeah,
mean, well, demand is like this, but the ability to supply is going down. Your
exactly.
time to get approvals has lengthened. The number of people is shrinking. So the capacity of the industry to increase production to meet demand is really compromised.
And I think that that requires, you know, some better work. I mean, you're kind of a lone wolf, Rob, where you're out there banging the table about, you know, this industry needs to communicate what it does differently than the past, currently, and where things are going into the future. I don't hear enough executives like you out there telling that story of how things are reclamated these days and the how you know how they're going about mining now and into the future. And I really think the industry needs to do a better job of that.
Well, I think the industry is focused on improving their environmental performance and stewardship. Um,
And they're doing terrific work, but they don't bang the drum about it.
well, we're also working against a very entrenched belief that mining has destroyed the environment, and it's taught from kindergarten all the way through. People are conditioned to believe that, well, think of the old picture of them ripping up the environment. They're not seeing, and the government isn't providing examples of this. The education system doesn't support this. It's a one-sided story of a rapacious industry and not showing all the good work that's being done, showing great examples of reclamation. Every once in a while, there's a disaster that just reinforces the belief that mining's bad, but it's it's few and far between today.
Absolutely.
You're right. The communication could be much better. And I think the industry should be insisting going back to all our suppliers and saying, look, we're paying you a lot of money to keep our accounts, to raise money for us, to do the legal affairs. All these suppliers, you're making a lot of money off us. Why aren't you talking about the benefits that we provide?
It's
And
even in their best interest.
it's definitely in their best interest. And I've been encouraging mining companies uh, to go sit on their lawyers, sit on their accountants and say, and going to the government, your tax and all of that. This is a fundamental industry. It's a high-paying industry.
Rob,
It's
your video went out. We can hear you fine, but your video went out. Can you,
I,
in the bottom left corner, you'll see a little video camera. Can you turn it back on? It might have a X or a red line through it.
I see leave, whiteboard, but I don't see a video.
On the left-hand side, it should be a video camera.
Nope.
Oh, well, they're gonna have to suffer with my face and listen to your commentary, Rob, if you don't mind.
Yeah, I don't know what happened there. I hit the table to emphasize a point and it went blank, but I didn't hit the keyboard.
The literal banging on the table. Yeah,
Yeah.
Rob, I think that the industry could do a tremendously better job of telling the story. And sometimes it shocks me that they don't do more of that. Like you said, lawyers can get out there, suppliers can get out there, and tell that story. I think another thing that it's incumbent on them to do, Rob, is I don't think people, you hear a lot about electric vehicles and modernizing the world. Now AI has come out of the woodwork, and that's a tremendous user of energy. And all of these things don't happen without mining. So, if you want those fancy new toys, you need mining to make them work.
Yes. Yes. And that's the naive approach the public has adopted, that we're going to shut down mining, we're going to shut down oil and gas, and we're going to transition, but not realizing that if you shut those down, we're going to go backwards in terms of standard of living. And
Yep.
that's why I entitled my speech that I gave in New York that you referred to earlier on, called Become a Nudist, Stop Mining, because all sorts of things disappear. And
We literally would go back to the Stone Age if there wasn't mining.
yes, well, I encourage people to take a look at our website. There's a video. My speech is in there, but it's interspersed with a number of videos
Yeah.
that try to make that point.
Yeah, and the reality of what all these wants and hopes and dreams, they are crucial. Mining is crucial to having any of those. And I don't really see people looking at it realistically. Even if you look at the internal combustion engine and the EV revolution, you look at the reality of EV. Oh, you're back on, Rob.
Hello.
You look at the reality of electric vehicles. If everybody in California owned an electric vehicle, came home after work and plugged the electric power grid can't even support when it gets a little hotter and everybody has to turn on their air conditioning. This happens in Texas. California in 2024 going through rolling blackouts. It's just mind-boggling to me. And this would only get worse if everybody had an electric vehicle. So I see that reality is not being looked at. And the transition between, you can't just go from a internal combustion engine to an electric vehicle. There has to be transitions in there. One that I'm looking at lately is hydrogen vehicles. This is a tremendous opportunity for transition to electric vehicles, and it could continue to compete with electric vehicles in certain usages. And but this whole story is not well understood. Yeah, rah rah rah, let's get an electric vehicle. But what about how you power that? Where do you get the energy from? What do you cause to your local power grid in California and Texas and other places? What is the transition between this and that? I just don't see it being well understood, and I don't see the industry literally banging the desk to get this better understood.
Well, beyond just EVs consuming a lot of power, just take a look at the AI programs, the generative AI and chat GPT and all of that. And then Bitcoins, the manufacture of cryptocurrencies. They
And
all,
cloud
yeah.
computing, yeah.
So they're all huge, huge consumers of electrical power and reducing the capacity to charge vehicles. And it's been very easy for politicians to say, well, let's switch. But they're not dealing with what you need to do that switch. What do we have to upgrade our electrical system, and how are we going to do that? And what type of investment? The intent is very, very good,
Absolutely.
but we may be disappointed in the speed at which it happens because of the current capacity and the lack of investment to increase the capacity to generate electricity before we say, okay, everybody in and get it all electric. And then you go, well, why am I waiting to recharge my car? Why? I can go to a gas pump and fill it up, but I can't. There are places I go and I go to charge and I have to wait in line.
Sometimes I
I mean,
think,
I've had two Teslas and hybrids, and I like it. It's simple, less maintenance. It's good for the environment, but you're finding there's range anxiety. When's my battery going to run out? And they were at service stations. It used to be really easy. You pull in, you charge. There might be a convenience place. You get a coffee or something. Now you're having a meal in some cases before you get your car charged. Anyhow, they'll all be solved as we go forward. But
well, I think we need, we're an industry that's kind of well known for being promoters. And I think the promoters of those electric vehicles and cryptocurrency and alternative energy and other things are kind of putting us to shame in this industry, Rob.
yeah, I just put my water glass down and the video disappeared again.
Uh,
I don't know how it's coordinated like that, but
Before I leave you, Rob, I wanted to go back to your gold, because I think there's a big catalyst coming for gold mining stocks. I think when we see the second quarter, there's going to be some windfall profits for gold mining companies. And because this will be the best quarter ever for the average price of gold. And I think that that's going to be the catalyst that starts to bring some of the generalist investors into the gold stocks. What do you think about that analysis?
certainly the price has improved. Costs have gone up. Um, I do think it'll raise people's eyebrows that there is money being made. The effect will be, there should be dividends being increased at some point. And for the marginal producers, the high cost producers, all of a sudden you're swinging from being a break even or a loss to into the money.
Yeah.
And that will attract investors. But it's been a sector that has been ignored, and that's why I think there's a big opportunity for people to take some positions now, while we're in the sort of the May doldrums, summer doldrums. It's
Yeah.
often a case, and you see a cyclical swing come in October,
And
September.
sometimes it's those marginal producers that can be big movers in a transition to a gold stock bull market. I think that they're not all created equal. If they're not doing the work to bring down the cost, increase production, make more money, not just from an improved gold price, that is what separates them. And that's where McEwen Mining fits into this whole. Not only do you have a great copper asset, but you have a marginal gold mining that you're doing the work to turn the corner on increasing production and bringing down costs while also enjoying the higher price we've seen in the second quarter of 2024.
Yes. Well, we've invested quite heavily in exploration, particularly at Fox and at Los Azules. At Fox, there's about 1.5 million ounces we've defined. We're switching from one area we've been mining to another. We're seeing the costs will come down because we've eliminated the transportation component. We were mining one place.
That's from Froome to Stock.
Yeah, we had to transport about 30 miles. And there was a large net smelter royalty on that production that won't be on. And we'll aim the rock, the hardness of the rock is lower, meaning we can, in the process plant, move more ore through it and produce more gold. I mean, it's not a huge mine, but it's 45, 50,000 ounces. We think we can get it up to about 70, bring the cost down. And then there's another deposit short distance away called Gray Fox that has over 1 million ounces at it as well. So it's exciting right now. We're exploring at Gold Bar, and our partner down in Argentina in our San Jose mine, it's a underground gold silver mine. They're finding encouragement and production costs are coming down, and they're getting more reliable in delivering. So all in all, it's pretty good.
Well, and something that I know you will never be lost on you, but might be lost on the audience, is that the big transition, the big turn from a struggler to a big success was Gold Corp. And under your tenure at Gold Corp, you did that with the drill rig. And I can see the actions your actions speak louder than words. And you guys are focusing a lot of drilling. And I think that is trying to follow a bit of the Gold Corp path. Is that a fair way to?
Yep, absolutely. I'm a sucker for distressed assets, probably because entry point is low cost-wise. It does take longer for it to have a turnaround, but at Red Lake, a Red Lake mine, it was high cost, a history of difficult labor relations, short life. We committed 10 million to exploration. We went down. We were exploring a mile below surface. We hit a high-grade area. That discovery reset the geological interpretation of the region, kicked off a gold rush in that area. And we went from producing 50,000 ounces a year to 500,000 ounces a year. And our costs dropped from $360 an ounce to $60 an ounce.
And you're mining high grade.
Yeah, we were mining high grade. It was a 60-fold change in the economics.
Wow. And it made you, the reward for that was it made you one of the best performing gold stocks in the business. And you did a couple of interesting things while you were there, Rob. You had the Gold Corp Challenge, which helped you guys to find that deeper targets and the big success. but you were also holding back some of your production. I don't think a lot of companies follow that path like you did back then, Rob.
As I said earlier, we were low cost at $60 an ounce. You're paying a lot of tax. So in the province we're in, they had announced the tax rate was going to be lowered over the next 4 years. And we were kept finding more gold, and I was of the mind the gold price was going higher. It was around $400 at the time. So I thought, well, if I don't sell the gold, I don't have to pay tax until a later date. I can borrow against that financial asset on a pre-tax basis. Because I've increased the value of my financial assets by the reciprocal of my tax rate. And if we deliver it 4 years later, we're paying less tax because it's a lower tax rate. And if gold goes up as I thought it would, which it did go, we'd be making more money because we could sell that gold at a later date at a higher price.
Kind of making the taxes not that big of an issue.
Right. So our Timmins property, we bought at a large discount of what had been put into it. We've struggled through there for the last few years, but it's stabilized and coming on. Costs are coming down as we increase production. Exploration has found additional resources, and we still think that most of that is still considered shallow in the district in which we're in, which has deep roots. So we're still running there strong, and I like that. And the other areas where we have gold, and I think every investor should have gold. I mean, if you look at the portfolio's composition today, it's probably less than 1% of the portfolio of it globally have any exposure to gold. Central banks are buying at record levels, which is probably a good indication of where the price of gold's going in the future.
Well, I look at it as a debt situation. I think we're in a death spiral of debt in the world, in the United States in particular. And then I look at the debt that's out there and how much of that debt is backed up by gold. And I have made what some call an outlandish projection of gold price in the not too distant future. I'm
What's your
talking
number?
about 20,000 within 10 years.
Well, that make a few gold mines quite profitable.
And what the basic behind that is, Rob, is I believe these central bankers have to back up that debt with more gold. And that is what will be the engine. You look at just the BRICS nations doing it on a small scale relative to their debt right now, and they brought gold up to a record prices. And I think as we go back to a gold standard, I think that not only will the debt be backed up more with gold, but there will be more gold transactions and international trade done. And that combination is why I'm making such a big number call. And I've never done that in my career. I usually try to stay a year ahead. But looking at the pipeline, looking at the demand, looking at the grades in the deposits, I was willing to do a 10-year projection. And some people think I'm crazy, but I didn't just throw it out there without looking at some hard reality numbers.
Well, definitely fiat currency is something people are focusing on. And I think even the youth are looking at it and saying, my purchasing power is disappearing. You see in China, the youth over there buying gold beans, just sort of little round balls of gold. But Citibank came out and said they figured $3,000 this year. Bloomberg said 7,000 in next year. You and Pierre Lassonde are up around 20,000. He's 19 to 20. You're a little ahead of him at 20.
Yeah.
And the BRIC nations have been on a tear buying gold. So
I'm seeing a return to the gold standard, Rob. The debt the growing everything through debt and crazy spending. And I just see that pendulum has swung too far. And the only way to bring it back is through returning to a gold standard.
Yes. Well, even if that the price just went a quarter of the way to your target, you're looking at $5,000. And you go, all right, what's going to move if gold goes to $5,000? Gold stocks.
Absolutely. Absolutely. I don't need to be 100% right. If I'm 25% right, I'll be a happy camper.
I was in a grocery store the other day and I bought 4 items and I thought, how could they cost this much? I mean, and I think you look at groceries, you look at rent, you look at housing prices,
Insurance, gas.
insurance. That is one thing that you look at it and there are insurers pulling out of certain markets. Like if you're on on a coast, they're saying we can't do we're not, a number of them are pulling out. If you're on a mountain at a ski resort or something, there's wildfire issues that are coming in. And I have a home in Colorado and we replaced the roof. The building code for the area was cedar roof cedar shake roof. And a couple of years ago, they started saying, well, if any house sells here and it has a cedar shake roof, we won't insure it until they put a synthetic roof on. And ours was an older roof, so we put a synthetic on. And the insurer we were using said, we're no longer providing insurance to this location.
Oh my gosh.
And you start thinking,
So even with higher premiums, they still won't take your business.
they still won't take it. And it's really troubling if you think if you're going to buy a house and you're going to get a mortgage, you have to have insurance.
Yeah.
If you can't get insurance, you're not getting a mortgage.
And what's going to happen if they can do that to your house? What's going to happen with the aging baby boomers, health insurance, life insurance? Those premiums are going to go crazy.
Yes. Well, the insurance companies have sustained huge losses from floods, tornadoes, fires, and they're just pulling out of markets where they've been losing money. There was a really good article in the New York Times about that. I'll send a copy of it. I had it digitized
You
because
know
I looked.
what we hear this smoke and mirrors numbers that come out of the government about how they you can call it manipulation, whatever you want, but it's smoke and mirrors when they put out the inflation numbers and they exclude this and they exclude that but the consumer can see through the smoke and mirrors because they don't get to live in the world of government smoke and mirrors numbers. They got to go to the cash register and pay for things. They got to pay interest on when they use their credit card. They got to pay insurance and everything. They know that these numbers coming out in the government are smoke and mirrors.
Well, yeah, the insurance is a big point because these insurers are pulling out, one, because of the claims they've had to settle, but two, trying to rebuild the construction costs of also reflecting inflation and much more expensive. And similar to the mining industry, not as many people went through the trade schools. So you're looking at trying to get service on your house. That's costing you more too.
You're better off being a plumber and a roof builder and a house builder than you are, some of these university degrees that people get.
Well, there's where you've also seen huge inflation, that you've had a lot of people going through schools and getting degrees financed by student loans, and they can't get a job, so they're going from an undergraduate to a graduate to postgraduates
to no job.
to no job. And that's really sad that someone's been taught to believe that going through university, they'd be able to get a job, but maybe no one told them that there's certain courses that won't get you a job. You may be more balanced as an individual.
But we'll give you the debt. You can have the debt.
It
No
was too
problem.
easy. And then all these schools of higher education have expanded their programs and become more expensive to go to. The free money that was essentially given at student loans, and it's becoming free with the forgiveness of the loans. And you have to think, if I went through and I repaid my loan, why are these people getting off free?
Yeah.
Uh, and why am I paying for it as a taxpayer? Uh,
The
but that,
government might have to do the same with their debt,
yes,
write it
well,
off.
maybe we should ask the politicians to start paying for all the mistakes they've made.
And they've made a lot of them. And that's why, you know, I looked at this death spiral of debt that I've been commenting on a lot. And I do things when I know I have confidence to do those things. And to call it a death spiral of debt and keep harping on about it and that it's driving us towards a gold standard. You just look at it's not, you don't have to be a rocket scientist to figure that you got to be reasonably good at basic math.
Yes, yes, yeah.
And
No, that's key. And they seem to have been neglected that course in school.
you look at Rob, the United States is going to within a year they're going to be paying close to $2 trillion just to service the debt.
And that's bigger than the defense budget.
Exactly. And it's only going to grow because you've got 9 trillion that was built up during the free money era that now has to roll over to 5.5%. Do the math.
Mm.
That's going to double your costs. And they keep on spending money.
Yes.
The debt in the United States is now 35 trillion. I think by the end of the next president's first year, it'll be 40 trillion. And before they finish their first term, it'll be 50 trillion. So look at that debt servicing costs. That's a 50% gain in debt.
I mean, it's just numbers that are so hard to comprehend.
It's
And
shocking.
what does it do to the services, the ability of the country to provide services, important social services to everyone?
I think the BRICS nations got the right formula, Rob. They need to go back to the gold standard to have something real. I don't just think it should be a gold standard, by the way. I think they should build up their strategic reserves of silver, copper, everything that a particular country needs to manufacture what they produce. They should be holding strategic reserves of that. So I think we need to go back to a metals standard or a raw materials standard led by gold. And I think gold will bring us to that.
Well, there were strategic reserves and they've been depleted.
Absolutely. Absolutely.
Uh,
We got to go back to the future. To go to the future, we have to go backwards and go back to this, basic economics.
but we have to regain the values that we used to believe in, and those have been badly eroded.
I
Uh,
remember, and I'm 59 years old now. I remember when people used to talk about debt more.
yeah, in a manner that wasn't complimentary.
Yeah, exactly, exactly. Politicians used to campaign on debt, taxes, regulations. Now they just campaign on what they can promise.
Yeah. Now we've moved a long way away from the values that the founding fathers had.
Founding fathers all over the world.
So
Well,
we have to get back there and
Rob,
go in those ways.
you've been super kind with your time. I know you're a busy guy. Thank you very much for spending time with us. Everybody do your homework, speak with your financial planners. McEwen Mining has a great story on transitioning their higher cost operations in gold mining to lower cost. They're moving forward on the copper. The copper project is a world-class project that the world needs for copper production. I can't wait until the day that you can merge all your financials together into a copper equivalent number and what that'll do to the bottom line. But again, Rob, thank you very much.
Thank you, Allan. Have a wonderful day.
You too, my friend. Talk to you soon. Bye-bye.
Cheers.